Hey, thanks for tuning in. In this video, we're doing a weekend review for the week ending January 7th, 2022. We're looking at a chart of the S&P 500. This is the weekly chart, and we do have declining volume. This is certainly a correction that's been going on since November. No other way to look at it. I'm looking at something like this. Maybe even a triangle, like an ascending triangle with higher lows and kind of a horizontal line up here. Maybe even that line's at 480. Doesn't really matter how you draw it. Looking at ascending triangle, riding the 20. No panic, still in this ascending channel. This channel means you buy the dip. It doesn't mean you sell the rip. It doesn't mean you're looking to short tops. It doesn't mean any of that. It just means buy the dip. The closer you get to the 20, the better. That's 457 coming into next week. You started the week at 480. This is an outside bearish reversal candle, right? Broke last week's highs and lows. Every single chart has an outside bearish reversal. It's just one candle within the context of what is a correction, in my opinion. So we're still trying to see where this lands. If we zoom in, we're just sitting at the 40. I think the 50 is a little bit lower. It doesn't really matter. This is the line that matters. You get below 455, and we probably are going to break below the 200. I mean, we'll certainly close below the 200, and everyone will say we're in a bear market for good. Those are the articles you need to see to buy the S&P 500. Until then, I think you're likely just to do this, ascending triangle thing here where we just go sideways, which is going to cause the most pain anyways for everyone. If you look at IWM, this is certainly only going to play out one of two ways. All right. So we got to go to the monthly to take a look. You do have a big lower wick on volume. So this is demand, right? This level 209, it's been showing demand for a long time. We do have an outside bullish reversal, certainly do right here. PPO is now negative. Well done. So went from 10 and now it's negative. This does look like declining sellers, which is what you want to see. We'll take everything away here and just talk through it here. So this is obviously very, very bearish, and we can't forget that. It definitely has the volume too. The volume came into this candle and that gap down, so they've never really been able to get back above 226. And the low here is around 208.03, or this low here is 209. So we're still stuck. We haven't done anything. What you do though have is a structure change, right? When she broke above here on volume and then gave that up. This to me changed the structure and the market, right? When did that happen? Beginning of November. Same time SPY consolidated at the same time all the other indexes did. And in my opinion, what you have here is something either like this, an ABC lower, in which we'd use the fib extension tool to draw something like that. It's either that or that. Doesn't really change much. Below 208, you're probably going to hit 200, maybe 195. I'm not holding my breath. You don't want to lose the 208 level. And given how you had this look above and fail look, the target really was here. And they came up to it, broke the 209, didn't break the 208, and reversed. Put in an outside bullish reversal, then a doji, which is showing indecision. And now, in hindsight, it was telling you that just there wasn't any demand to push price higher. This now looks like trap longs. You zoom into the daily. Technically speaking, you could sit here and argue, okay, as long as she's above this little trend line, and let's show you why that's here. As long as we're above this trend line, I mean, you don't really have a problem, and it would give you this perfect inverted head and shoulders look. Okay. That's definitely possible, and the volume supports that look, right? I don't disagree. What does look poorly for the bulls is this PPO getting rejected at the 0 line, and now what looks like a cross coming into play, the 40 crossing below the 200, and this pocket 222 is now above, and we've tagged the 200 now a whole bunch. So if we're going to go lower, this is generally how it would happen. Right? The 200 would put up a fight. This is the bulls putting up a fight. And then ultimately they would capitulate lower. And if you look at the structure, yeah, I don't know why this can't happen. And it also be perfectly healthy. I mean, any pullback into 173 to 185, the weekly 200 is a strong buy, especially coming back to test this former breakout area. And unfortunately, when you zoom out even further, this starts to look like a high and tight bull flag that's failing, right? Tried to break out and failed. So what does that mean? It means you're coming all the way back down to where the flag started. Where's that? 153s. And if you look at this structurally, right, we can all agree that this is certainly your 1-2. And when your .com crash occurred, what's very interesting to me is IWM didn't break the lows from 2000. Then you come up here, which now looks like a very obvious zigzag. And now what appears to be wave 5. So to me, I'm not liking this look at all. She's in a range, so there's no value to trading her unless you're at one of the extremes. She now looks pretty structurally, sound. Wave 5. Maybe we redraw this something like this. Very steep wave 2. Very shallow wave 4. Here's our wave 5. And then we come over, put in a retrace of 50%, which retraced the entire 5-wave move. I mean, this is also possible. And this would just be the start of the next run. So this is why it's not very clear to me how this one will play out. Eventually you get something like this to happen all over again. 1, 2, 3, 4, 5. Then we look for something like this, like I was talking about on the weekly. And then we can go again. It's really tough to say. So you get the bearish cross on the monthly. PPO's at 11, nowhere near 0 like it was back here when it was a great idea to go long. So yeah, this is a sell. And if you start going around the horn, right, like SMH, same boat. SMH monthly, I told you, is this a bearish harami? We talked about that to start the month. Here we go. Weekly broke last week's low to start the week, closed below SMA 10. This is an expanding ABC, and it looks like we're certainly coming back down to test this PPO 26 and this former high here. Again, starting to look a bit long in the tooth. And I'm not even really sure how we draw this last one, other than some type of triangle, ascending triangle, right? So we put it right here. Yeah, either way, we've got the divergence. You've got the monthly PPO bearish cross. You've got the weekly PPO still bullish, but crossing bear, and full-blown bear on the daily. So this looks like full-blown liquidation, and we're not interested until 280. Full stop. And the last big index is the Qs, which could be putting in a GG topping pattern. Like, this is done. It's done. What's at risk? Retracing at minimum 366, but ideally 350. Back down here and fill some gaps. We've got this pattern breaking, right? We've lost the divergence here, so that it's implying Lower prices are likely. We've came into this trend line and we didn't bounce. And we've come into this horizontal, level of support. We've come into this now 3 times. So I don't want this trade anymore. This trade is dead to me. The next place I'd like this trade. And look, PPO bearish cross at 15. Not the best look. Sorry. Weekly PPO breaking down more. And what do you have here? Same expanding ABC as you did on SMH. Same idea. So maybe we'll, I'll give you guys some ideas. And we'll put them here in blue. All right, 354 to 366. That's the general area. It aligns with the 200, something it hasn't tagged in a very long time. It also aligns with breaking this channel. So this is the first time this thing has broken, and that's kind of a big deal. But if you look at the weekly, we're nowhere near breaking the channel. Could easily come down to 350 and be very, very bullish. So it's not like this thing is done. Don't think that way. There are no major tops. Just look at things from the time frame that you're interested in. To me, that's weekly, daily. I don't play monthly charts, but if I see this, start to top out on a monthly, you're still technically inside 377.47. That's going to be the level. You break that level, 350s in play. So let's talk about some of the good, right? So Xlf Breakout, I've been talking to you about this one since basically December. I was accumulating weakness down here. I sold a little bit right here, added back right here at 39. And now I'm just sitting pretty with this full stack, looking to scale out here at 42. Then looking to buy some back. We're getting a bit extended from the 10, which is now at 39.78. This is a full-blown, bull trend, right? This can go on for a long time. I love this monthly chart pattern. This is very different than what you had in all the other charts. This to me is a very obvious 1, 2, 3, 4, 5. Wave 2 low. 1, 2, 3, 4. Putting in a 5. We're going to look for an ABC back. Anything into $30, if the general market is very weak, is a very strong buy long term. We did break this high momentum, which tells me this is a wave 3, right? This is wave 1 of wave 3. There's no other way to look at it. So I love this chart. I love this setup. I do love how PPO reset to 1 from 7, now curling up. This could continue for a while and then ultimately have some other correction. But we have a very obvious series of higher lows and higher highs. And the first tag of the weekly 40, right, since breaking above back here. And boom, as soon as she tagged it, all-time high. It's almost as if that was the liquidity boost that she was looking for. So again, this is the line that we're looking for to start this week. I'm not going to be chasing up here. We're looking to sell into 42s, then buy the weakness as the 10 catches up. All right, that's certainly what we're going to do. And when I do a lot of my scans, a lot of the charts that I see pop up are all banks right now. They're nothing else. There's literally nothing else to play. There's the Dow Jones Industrial, and then there's the banking sector of IWM. Yeah. And then let's take a look at Bitcoin, right? I do see something like this again, maybe 1, 2, 3. Here's the other thing. If this fails, right, and it certainly looks like it's going to, if this 41.63 fails or 40K 64, any of those levels fail, what ends up happening, right? So you get this little look here. That's definitely something that can play out, right? She comes down here. She can do this, okay? That's the last bull chance. But quite frankly, the longer she does this, the higher probability is that she's just going to capitulate lower down here to this low. And when you zoom out, that is what the monthly is telling, right? We do have a lower high here in momentum. Unlike XLF, I just showed you the opposite with XLF, right? Bitcoin is not showing that. Bitcoin peak was in 2017. And then boom, PPO is definitely curling down and showing us that there's a problem. So if we look at the structure, we're looking for something like this at minimum. You know, and if that maybe it's something like that, you know, 1, 2, 3, 4, 5, one more. I don't know. Just play it as it comes. But you know, there is a chance that monthly 20 could hold. Given the PPO, I'm not liking it. And also just the way that this works, like it doesn't hold. Look, it captures the 20, it tests the 10, and then the 20's dead. It's a pump and dump, okay? So they've done the pump, now they're doing the dump. So the 20, no one cares. The 40 is what we want. The 40 at 29K in about 3 months. Unfortunately, that's the outlook on Bitcoin. I don't have anything else to tell you. When I pull up silver, I get a similar story. It's going lower. If I look at any of the metals, they're all going lower. This is because the 10-year is mooning right now, okay? And so as long as this breakout holds, and look, she didn't, you know, that high 176, she closed 177, right? So closed a penny above. Look at this PPO. I mean, just right up to the zero line from -30. That's huge. Inverse head and shoulders, breaking above the neckline. 197 or 2 is the level. Capturing the 40 on the monthly is a big deal. This is now approaching a declining 200 on the weekly, but this PPO is very, very consistent with a bottom. Come back to the zero line after going to 17, reset completely, put in a divergence, and now trying to base higher. So yeah, we'll see how this one plays out. This is definitely driving a lot of the market. Obviously, we've put in this big move here, and you know, put in the 50% retrace. That's what we look for all the time. In this instance, it was the golden 61.8. You know, you've got something like this playing out, right, for wave 3. All right, and here's your wave 3. So it's going to go, it looks to me like this is going to go on for a little while. That being said, we're at a very key level of 176. And if we can't confirm a higher high in momentum, then this will put in a bearish divergence, which just increases the probability that some of these gaps are going to get filled and that maybe this whole thing is not impulsive. But we'll see how this plays out. It is definitely the chart to watch. And as I mentioned, a lot of these setups that I see are in banks. It's in XLF. And when I sort these names that pop up on the scanner, just year-to-date performance, FAS is beating them all, FAS. So I can show you 10 different banks that are all anywhere between 6 and 10% up on the last week, and any dip into daily EMA 5 or some hourly charts will certainly provide short-term demand to start this week. I think it would be better to focus on FAS, which is just the 3 times leveraged XLF chart. And as we get up into this level, see if we break through it, see if we base at it, watch what happens to momentum, see if this downtrend continues, or if we can break this 172 high. And if that happens, then what's likely to happen is this weekly is going to cross bull. And I know it may seem extended, but when you zoom out to the monthly, this is the chart that matters. It's at 10. Got it. Maybe it's going to curl over. Maybe it's going to reset to 0. But that's what just happened at the double top. And now we're above the double top. And this is your perfect cup and handle look. And guess what XLF represents? It's all the banks. Berkshire Hathaway, JP Morgan, Bank of America, Wells Fargo, Citigroup, Morgan Stanley, etc. So these guys I don't think are going away anytime soon. And if you look at interest rates rising, if the Fed does not raise rates, then this XLF chart is questionable. But the assumption right now is that they're raising rates, and that's going to happen in March. So it's January 8th. You've got 2 months, essentially, to mark up the financials before any disappointment could possibly happen. That being said, I hope everyone has a good week, a great 2022. The focus for me is going to continue to be on banks and the Dow Jones, while ignoring and shorting tech. SPY is likely to go sideways or down to 455. And remember the expanded ABC patterns that are in play on QQQ and SMH, the possible inverted head and shoulders on IWM. And if it's not, look for a zigzag lower. And I guess we'll end the video here on this. If this is a zigzag lower here on the weekly, then what's likely to happen is this. Okay, and it's going to match. We're going to take away everything here and just look at some market symmetry. The fibs and the number of candles here. So we'll redraw these fibs. It doesn't really matter if you do it like this or if you come down here. They're going to give you the same general numbers. We're looking for the 618, the 1.0 and 1236 extension. This is generally where the ABCs land. If it's a zigzag, it could come down to the 168. Anything past 168 implies wave 3 of a 5-wave move lower. So what we are looking for is this downtrend to terminate into one of these extensions. And what we're going to do is just count the candles for the time component of A, and it's generally equal to the time component of C. So it'd be 1, 2, 3, 4. 1, 2, 3, 4. We're looking for this to end at the end of January and to start February. And if you go back to where this consolidation started, it was March of 2021. So if they are to do anything, it's entirely possible it could be a whole year of consolidation before the move actually begins. And I will end on this. Below 207 is really, really bad. Okay? Holding 207 is not a problem. This, to me, while it looks like a potential zigzag, could also be the start of a 5-wave move. And the only way to give yourself any clues is to use the hourly and try to see, is this most recent move up 5 waves or not? And the problem with that method is that if we have an ABC like this, then this C wave will be 5 waves regardless. So there's no way to gain any edge by looking at Elliott wave and saying, hey, there's an hourly impulsive move higher, therefore we should expect a zigzag lower, a 50% to 61.8% retrace, right? And then another impulsive higher. We can't do that with this particular pattern because we had an impulsive move lower and then an ABC, which could really just be a running flat, an expanded flat within the context of, an ABC, right? So the B being this expanded flat or running flat. So we don't really have an edge looking at the hourly. I don't have an edge from a structure standpoint. We have no value of the moving averages because we're technically still range bound. So moving averages provide little to no value or insight or edge while you're consolidating. And the only thing we have are the trend lines, the horizontal price levels that we've been watching, right? This gap that's been left over here at 213. We have the volume that is declining. And then most importantly, we have our oscillators. When you're range bound, you want to use the oscillators to try to tell you what's going on. What I've seen here is it's certainly been expanding. And we have satisfied breaking this low in price and in momentum, and now have come back up to the zero line and the point of control and have been rejected. That being said, we don't have the volume yet to instill any fear, and 212 to 214 is a strong buy, and it does give you the inverse head and shoulders structure. So what we want to see to start the week is a gap lower in IWM. That to be bought up and to see impulsive structure higher almost within a few days, coming all the way back up to 226. Put in a little bit of a wave 2 of wave 3, and then lift off to all-time highs. And if that scenario does not play out in that fashion, what's likely to happen is they're going to break this 212, 213, 210 level, bounce a little bit, get rejected at the gap, the 214 area, get rejected here, and then head to 180, 170, 195. I don't really know. The first stop is likely the 20 on the monthly, which is now at 200. And again, that would technically satisfy a weekly ABC, right? 195 to 207. These are all levels that technically satisfy this pattern where you could find impulsive buyers to push price higher. So I hope that helps. I hope it's not too confusing. We try to use these fibs to give us the structure of these corrections. IWM in particular has been rather challenging, and IYT is another one here, right? Is this a lower high? And it very well could be. This is a doji. Volume's declining, PPO's trying, but PPO is still at a bearish divergence. If they don't really get going here, this one's in a world of trouble too. And this is really the Dow theory tenets. I think it's like rule 4 or 5. They need to see all the averages setting new highs to confirm the price higher, and we just don't have that in the transports. And the move higher in the IWM was sold off. It was a trap, and we're now seeing Qs and SMH break down. And when this happens, SPY is the last to go. And when if SPY breaks 450 and IWM's breaking 209, then you're going to find yourself real quickly the transports back down here at 240. And that would complete, ideally, this correction, something like that. I don't really know anymore. This is still a cup and handle. I'm not panicking yet. Still above all the moving averages. Still have this, but I'm giving the bear case. If you start to see things break down in IWM, you're going to see it happen in IYT. You're going to see QQQ melt lower to this 350, and you're going to see SPY melt lower to 440, possibly even 425. So I hope this helps. I hope you guys are having a great 2022. If you like the content, please like the video. Check us out on Twitter, subscribe to the channel, and we'll see you in the next video.